So someone told you the best way to save tax is to start working through a company and you formed a company. And after that, you don't have any idea what your obligations are, what you need to do in the company. Now, the purpose of this video is to let you know the bare minimum requirements and things you should know once you form the company and how you would get around that. So without further ado, let's get started with it. First thing and the big one is that the company is not you. Think of it like the day you've registered, the government basically created a brand new person. The person has its own name, its own bank account, and its own tax file number. You just happen to own it and run it. So what does it mean in real life? It means company's money is not your money. You don't pay your grocery on your company card. Don't pay Uber Eats, family dinners. Nothing is not allowed. Nothing is allowed in there. There's only three-way money to get out of the company. One is wages, other one is to pay dividends to yourself, or the other one is borrow money from the company. Borrowing sounds good, but it's a trap. We'll come back to that later. Your business and your life needs your own wallet. Second thing that you have to consider is ASIC. Once a year, you're going to get a letter from ASIC. That's a government agency that keeps register of every company that is in Australia. The letter comes on the anniversary when you started the company. It has two things: an invoice, which right now at the moment of shooting this video is around $329 a year for a standard company, and a list of your company details. You pay the bill, you check the details are still right, and you are done. You also got to sign something which is called solvency resolution. It's a fancy name, but in simple terms is basically director saying that, yep, I can pay the bill when it's due. You don't need to send it anywhere. You just need to keep it in file, miss the payment deadline, and there's a kick of late fees that will come to you. At the moment, it's about $96 for a month's late and about $401 if you are late after this date. So mark this date and ensure that you're paying that ASIC bill on time. Now, the next thing, anything important, changes to your company, you've got 28 days to tell ASIC. You've moved office, you've added a director, you've changed the shareholder, all that needs to be done within 28 days. If you miss it, you will have to pay a late fees to the ASIC. So kindly ensure that any updates to your company profile is being done within 28 days. Fourth thing, and buckle up because this is where the acronym would start flying around. I'll try to make this process as painless as for you. Your company needs two ID. One is a tax file number. A tax file number in short is known as TFN. It's just like your personal tax ID. And the other one is ABN, which is known as Australian Business Number. This is basically your public facing business ID that you would put on your invoices. Now the GST, that's 10% on every receipt. Here's the rule: if your company is going to make 75,000 or more in a year, you need to register for GST. Once you do that, you would have to charge 10% on your sales, and you can claim back on things that you've bought to make that sales. The difference goes to the tax office. Now the question that will come to your mind is that how would you report that to the tax office? That's simple. That's done in BAS. Now BAS is a business activity statement. Think of BAS as your regular homework. It tells the tax office a few things in one single form: the GST you collected, the tax you took out on employee wages, a prepayment of your own company tax. Most cases, you will be lodging quarterly basis for a small company, which is every 3 months. Now, if you have not registered for GST, but you still need to report things like wages or your own tax installment, that is done through IAS. Now, IAS stands for Installment Activity Statement. Same idea as BAS, just without the GST part in there. Quick rule of thumb: GST registered, you have to lodge a BAS. Not GST registered, you got PAYG obligations, you would need to lodge an IAS. Now here's a wrinkle that most people don't know about. How often you lodge actually depends on the wages that you are taking out. The ATO puts you in 3 buckets. If you are withholding between $25,000 or less in a year on staff wages, you are a small withholder for them. You report on a quarterly basis through IAS or BASes. Most of the new companies actually falls within this bucket. If you are withholding between 25,000 or 1 million in a year, you actually become a medium withholder. And with that said, you would have to lodge and pay the ATO on a monthly basis every single month by 21st. And if you're withholding over 1 million in a year, that's when you become a large withholder. And you would have to pay about a week of every pay run. So the moment your wages bill gets above the withholding of more than 25,000 in a year in taxes, the lodgement schedule actually flips from quarterly to monthly. Whether you like it or not, the ATO writes to you in April each year to tell you the bucket you will be in the for the next financial year. Hey guys, so if I've not confused you enough, there are two more acronyms that we need to go through. These are known as PAYGs, and I kid you not, this is the most common question that I get asked from my clients. Even the old ones get this wrong. So without further ado, let's get started with it. It's called the PAYGs. There are two types of PAYG. PAYG withholding is when you pay your employee, you don't give them the full amount, you only give them the wages and you withhold some amount of tax and then send it to the ATO. That was the thing that we were talking about before. Now there's another thing which is called as PAYG installment, and it's totally different from PAYG withholdings that we talked about. PAYG installment, this is about companies' own taxes. Instead of paying one massive bill at the end of the year, the tax office actually expects you to pay chunk every quarter. The tax office will tell you when it kicks in. It usually kicks in once you start your first profitable year. The last thing that I need to talk to you about is FBT. FBT is fringe benefit tax. If you give employees something that isn't cash, like a company car or company paying bill or company paying their gym membership, that's called fringe benefit. It is a separate kind of tax, and if you are doing that kind of stuff with your staff, you would need to register for it. Now moving on to the fifth thing that catches most of the people. Sometimes life gets busy, you incorporated a company but you didn't do anything about it. There was no transactions, nothing happened, and you think that there's probably nothing to lodge. Now, that is wrong. The tax office actually expects you to lodge your tax returns even though you have not done any business in there. So, in that particular case, you need to ensure that you lodge your tax return as nil, or you can also lodge as return not necessary if there was not even a single transaction that was run in the company. Same applies to the BAS as well. If you haven't done any transactions and your BAS is coming as outstanding with the Australian tax office, you would have to lodge it even though if it is nil. In one of the cases, one of the clients actually ignored this, and then in that particular scenario he had to pay a penalty of whooping, I think, about $5,000 because he had 3 BASes outstanding which he hasn't lodged, and the ATO penalized him for each BASes, I think, about 1,350, even though the BASes were nil. So guys, always ensure that whatever outstanding lodgements you have in the company, you keep track of it. Don't assume that you don't have to lodge anything. Always go on MyGov and see what outstanding things you have. If you don't have access to MyGov, please get in touch with your tax agents to ensure that actually they are lodging the obligations, whatever the ATO is expecting them to lodge. Sixth thing, payroll. The moment you pay anyone wages, including yourself, you become an employer. Congratulations on being an employer. But being an employer in Australia is a proper job in itself. Here is what you are actually up to when you are signing up for payroll. Now, one, payslip. You have to pay your employees, and whenever you pay your employees, you need to issue them a payslip. The payslip would actually show them their gross wages, tax that you've taken out, superannuations, and all other things. Now, the right rate is also important. Most of the employees are covered by something called as modern awards. That's the government documents that set the minimum wages, the penalty rates, the weekends rate, the public holiday rates, the overtime rules, the allowances. Underpay them even by an accident, you would actually go into the territory which is called as wage thefts. That also includes criminal penalties for this. So look up for this award or go to your accountant who can help you in finding out the correct award. 3 is single touch payroll, which also stands for STP. This is where anything that you processes in your payroll system actually gets lodged with the Australian tax office on a real-time basis. Software like Xero, QuickBooks, and Mayo have this feature, so you would be able to lodge your payrolls if you're using these softwares. Fourth, the important when you are actually setting up the employees, ensure that full-time employees or part-time employees get their annual leaves. So in Australia, the annual leaves is about 4 weeks, and the sick leave is about 2 weeks. So ensure that when you're setting up the employees in Xero QuickBooks, you are ensuring that when you're processing the payment, the accruals for the annual leaves are actually coming in properly into the system. If you haven't got that right, you would have to again do all the calculations and then fix those into the system. 5 is the paperwork when any new employee starts: the tax file number, the declaration form, the super choice form. These are sort of the documents that you would need to have in your documentation when a new employee starts. If this sounds like a lot, it is. Payroll is the number one thing where business owner messes up things. Get it right from day one and you'll be okay. But if you don't get it right, it'll come back and haunt you for years. Seventh thing is superannuation or super. This generally follows up from the payroll that we discussed before. If you pay anyone wages, you have to put their money into superannuation fund on top of the wages. Right now it stands at 12% when you pay them. So if you pay someone $1,000, you would have to pay $120 on top of it. That's the law. It's due every 3 months, and if you pay it late, you get basically hit by a penalty, interest, admin charges, and the amount that you actually pay to the Australian tax office becomes non-deductible as well. So I would strongly advise that you ensure that the superannuation is never late. And also, while we are shooting this video, payday super is going to come from 1st of July 2026, which means that you would have to pay superannuation as soon as you process the wages, because it needs to land into the employee account within 7 days. By landing, I mean it should be there in the employee account. It should not be processed within 7 days, because if it's processed within 7 days, the super clearing houses takes their own. At the moment, they take about like 3 to 4 days to process the superannuation. So we need to ensure that it's been processed within the same day you are actually processing your payroll, so that it lands within 7 days. It's important, highly important. Do not miss this step, because it would cause severe penalties and administrative charges on you. Now moving on to the 8th item, which is tip 7A, a trap that I actually warned you about earlier as well. It does not matter whether you are new or you are old, you can still get into a messy situation because of this. Now, to give you an example, let's suppose you are in November and you want to do shopping for the month of December. What do? You just take out money from the company, right? It's easy. Well, that's where most of the things gets wrong. You cannot just take out money from the company. If you do, you have to ensure that it's paid before the end of the financial year or before the tax return is actually lodged, to avoid this. And if the money is not being repaid, you need to have proper agreements in place in which you are paying the company an interest, which is called basically documents for the purpose of tip 7A loans. If you are in situation like this, you should ensure that you are getting in touch with your accountant and getting it resolved before it actually becomes too big and a messy problem for you. 9th thing, keep everything. Every invoice, every receipt, every contract, every bank statement for 7 years. If the tax office comes asking questions 3 years later down the line and you say, I've lost it, that's not the answer they're going to accept. Get yourself on Xero, QuickBooks, Mayo, whatever works for you. Link your bank, take photos of the receipts as you go and put them on that, so that your future is good and you have all the records and invoices that you need in case the ATO audits you. The 10th and the last thing that I want to discuss with you is the title of director. It has some legal responsibilities. It's not just a title on its own. The biggest one is that you cannot keep the company running if you know that the company can't pay its bills. That's the solvency resolution that we discussed before. If the company goes under and the tax office decide that you kept on running the company even though that the company was sinking, they can come after you personally. Your house, your car, your savings, all of them can actually get involved in there. So if you think things are getting tighter, don't stay quiet. Call your accountant early. There are legal protections that only works if you act before it's too late. All right, now hopefully I've covered enough for you guys so that you know at least the bare basics of the companies. If any of the part actually felt overwhelming, don't worry. This is literally what we do at Acebiz all day. We can handle all of that for you so that you can just focus on running on your business. As I promised, I would also provide you with a cheat sheet in a link in the description provided below.